panel. This must have whetted your appetite for more. Plenty of opportunity there. We'll hear now from Brunno. He's back with a vengeance. The veterans and the believers will recall his speech last year. He's back for more. Not any lame climate solutions, no, powerful climate solutions. Brunno, over to you.
Thanks, Pete. Thank you. Hello, everyone. I don't have a clicker. Hopefully I'll get one soon. Thank you. So, before we start, thank you for having me once again. I am glad to be one of the veterans that Pete talked about. I've been in the industry for a good 20 years now, believe it or not. I know I don't look my age, you can tell me that, that's all right. So, maybe I'll start with a little bit of an anecdote of one of my favorite moments in my career so far. I'd spent weeks negotiating contracts. I don't know if any of you have done project finance, but it's extremely dry. You sit in a room with very expensive lawyers for weeks on end, trying to figure out a book of contracts for a particular project. And so it was with a lot of pleasure 10 years ago that I got to climb this tower that we'd built for a concentrated solar power plant in South Africa, the first 270-degree mirror field. So it was quite overwhelming standing at the top of the tower looking at the sea of 120 square meter mirrors around the desert in South Africa to concentrate solar power. Really phenomenal. And the reason why I'm telling you this story is because, I think it's quite natural for us as human beings to think about climate investments or any kind of impact investments where we can actually see the tangible results of what we're doing. And it's very natural to gravitate towards that kind of investment. And certainly today, if you're interested, we are launching a renewable energy fund. My colleague Baz is here to talk about that. He's building those wonderful wind turbines that you see when you go to the beach in the Netherlands now, right? Everywhere you see those wind turbines. Always wonderful to see that. But the wonderful thing since then is that I've gotten more excited about other opportunities to have powerful climate investments, or indeed a good climate impact in various different types of ways. So hopefully what I'll leave you with today is a few ideas of different ways to achieve that kind of impact without having to think solely about, which are equally important, the windmills and the solar power plants that we all like to see lovely pictures of. So climate solutions are great, but there's many ways to invest in them, and not all of them are very obvious at first. So hopefully I'll tell you a few new stories there. Secondly, every investment faces the climate transition, right? So the question is, how prepared are they? And a lot of you here are portfolio investors, so if you're looking at a portfolio, you need to think about this much more broadly than just the climate solutions. The secondary impacts on climate are not always obvious, and I'll tell you a little story about a bank that we've been investing with that is quite interesting there. And then finally, climate solutions are great. I know I harp on about this every time I'm on this stage, but I will say that, leave you with that message again. Climate solutions are great, but your impact might be greater if you are taking yourself seriously as a force for good, as an investor, doing the work that you need to do on the engagement front, being an active owner, getting those companies to change. So let's talk about the exciting stuff. I'm just going to give you a few examples of where we are. I'm going to start at the risky end of the spectrum, the classic end of the spectrum in our listed equity fund. This is an example from our sustainable equity fund. We love this stock, Energy Recovery, because it's a climate adaptation story in combination with a climate mitigation story. We know that we're going to have to desalinate more water in the future. Not super sexy stuff talking about a new osmosis process. You have to be a little bit geeky to get into that, but it's really an exciting story what they've managed to achieve. So these folks are actually saving a lot of energy, and their desal plants using their devices are already producing around 16% of US consumption of water. So that's really a powerful story about a new technology, reverse osmosis process, that's really saving a lot of energy whilst delivering the water that we're all going to need, because climate change is happening already, right? So that's a really exciting story. And that's in sustainable equity, so listed equity example. Next, I wanted to give you an example of a company that we've invested in through our venture credit facility. So maybe you don't want to get into equities, and a lot of our climate solutions that are we're approached by as investors are in the private equity and listed equity space. But actually, we are starting to see the maturing of these companies, and we heard about that a little bit earlier, the importance of scale-up capital, right? So this is a company, it's an interesting statistics that they put in front of their report. A third of Lake Tahoe is heated at all times in America. So the importance of having efficiency in heating water is extremely high there. So this technology that they've invented, or that they're bringing to market, gives you 40 to 70% cost and energy savings. And they can track and report their energy savings comparing to tank water heaters, so they can give you a lot of really cool impact metrics that they track about the carbon savings, the energy savings, and everything that they're achieving and contributing towards. Moving up the chain, so I'm really glad the EIF was here because I wanted to give you a blended finance example, and thanks to the EIF, we have our small cap lending program in the Netherlands. This is a very exciting company that's really at the forefront of all of the EV charging stations. They're doing a lot of work in the Netherlands and elsewhere, installing charging stations for EVs, so very important transition story for the transport sector there. What's interesting about this company is that if you were to invest in it on the equity side, you might find that too risky, right? But here we have EIF providing a first loss guarantee for lending to this firm. It's definitely an innovation that they're bringing to the table, and they're creating a lot of jobs, so it fits the EIF guarantee facility as well, and it tells a really interesting story about climate change too. So less risk than you'd expect from if you were in on the equity side. But moving up the risk chain, the really big story of energy transition and climate transition is in emerging markets. I mean, of course, there's a huge amount of work to do in our energy systems here in Europe or in the developed markets, but we have to get emerging markets to leapfrog our technologies if we're going to avoid a whole lot of emissions in developing countries. So getting those projects built in emerging markets is extremely important and very close to my heart since I worked on this for many, many years. But here's a way that you can finance that without worrying too much about the risk. You talk to most pension funds, they're going to tell you, emerging markets project finance risk, what are you talking about? I can't even touch that. But there are ways to get into that kind of exposure without taking all of the risk that you would expect. So here we are taking insurance companies that are single or AA rated, fully backing that credit, and building a dam in Rwanda that's really going to help Rwanda diversify its energy mix towards more renewables, but also provide irrigation water and help the agriculture industry in Rwanda provide water that the company needs to develop. So a really exciting story from many angles there. And then one of the least obvious examples I have here is in CLOs. So collateralized loan obligations, portfolios of loans, syndicated loans that are packaged and then sold off in securities called CLOs. What we've been doing is analyzing the CLO collateral and trying to figure out amongst this company, it's a universe of about 1,000 companies in Europe, what are they doing with respect to sustainability? And within that, we find some really exciting stories as well, Flender being one of them. They're making a lot of the gearboxes that go into these wind turbines, German company. And again, an excellent story if you dig enough to find those stories. So what we find is that we have to dig a little deeper. It's not always obvious where the stories are going to come from, but it is important to do that digging to figure out, and that also allows you to then potentially build a portfolio of more sustainable CLOs if that's the risk profile that you're looking for as an investor as well. Bear with me here, Walmart, a bit controversial, but I did want to give you our favorite green bond example. Little story here is that Walmart de Mexico was the very first power purchase agreement for a renewable energy project in Mexico. So they fully, from scratch, developed, were really the pilot test case for the Mexican wind industry that we see today, and it's super, a lively industry. So yeah, Walmart, a lot of labor issues, a lot of potential negative impacts on the social side, but their green bonds are really focused on this kind of activity, which, as I say, can fully develop markets. With a PPA coming from a buyer such as Walmart, you can really fully get investors excited, developers excited about launching those projects in places that you wouldn't necessarily be able to launch those projects without. So really important green bond here. What we really like about this green bond is also that the impact reporting is superb. It's really top-notch quality, which you don't always see with green bonds, as I'm sure you're aware. Next on the list, I wanted to give you an example of a sovereign bond. So why do we get excited? Why would you even think of sovereign bonds as a powerful climate investment, right? Well, again, it's a story about digging deeper. What are those countries doing with respect to climate change? And in Uruguay, why we like Uruguay is because it's a high-income country, but it is in Latin America and competing with countries that have historically had a lot of hydro energy and are therefore very climate positive already. Uruguay has really been picking up its momentum. You can see on that graph on the right-hand side there, they've really been coming up to their peers in Latin America in terms of investing in renewable energy. They're investing about 3% of their annual GDP in renewables. That's a really high number for a country that's where it is placed and the size that it is. So really exciting story here. By buying that sovereign bond, this sits in our Sustainable Sovereign Fund, we are essentially giving capital to that country to actually deliver on the climate promises that it's making and the climate plan that it's delivering. Okay, so those were some really cool ideas of climate solutions, different ways to access it for different risk profiles and different tastes. But in your overall portfolio, let's not forget a lot of impact on the climate as well. And this is where we are today, 10 years of working on this, on impact. We can now start thinking about impact in a much more holistic fashion across all types of investments. To do that, we need to not just look at carbon emissions, because GHG emissions, as you all know, is historical. We might get it 2 years back. It doesn't tell us a story about where the company is going. So important to actually look at every single investment you have in your portfolio and be able to assess it systematically for how ready those companies are for the future, not just through their carbon emissions and their historical performance, but also through their strategy, through their activities, through their lobbying activities, through their capital expenditure plans, through their target setting, through their strategy. And this is what we do with our climate transition research. That's exactly what we're doing. So we're taking company by company. For every company, we do the top part of this chart, looking at the ambitions and targets, the emissions performance, management and governance, which applies to all companies. But then the bottom part of the chart is really sector specific, and we won't do that for what we call low influence sectors, because things like IT have very little impact on climate change in comparison to somebody like Shell that has a very large influence. So really important to get this analysis done, and what we see here is Shell comes out as a laggard, even for compared to its sector peers, whereas somebody like Iberdrola is really exciting from we really consider them a leader when you look at their targets for scope 3, their phase out, no exposure to coal already. They've already closed all of their coal power stations. Their lobbying is really aligned to their activities, and we see their intensity being really positive as well. Some development points, as there are with most companies, but we really see them as a leader in the industry. So you can do this analysis across your entire portfolio, and using this analysis, you can really build an approach to managing climate transition risk across the entire portfolio. That's the idea. And with that, of course, a net zero portfolio eventually by 2050, if you start moving your portfolio towards the leaders and the companies that are most prepared for climate change. Then I told you I was going to tell you a little bit of a story. I really like this story because where we started with this bank in Indonesia was really a story about microfinance. It was about access to finance for the poorest, for the underserved. It's one of the oldest commercial banks in Indonesia. They lend a lot to these unbankable groups, what we call unbankable groups, very common story. And we could have left it at that, right? We could have just put this in our impact portfolio and thought, wow, there's a wonderful SME lending and microfinance story here, and that's the impact that we're going for. They're also, by the way, doing a bit of renewable energy and green projects, but it wasn't a huge part of their portfolio. But then we started digging a little deeper, and we were a bit worried, of course, that Indonesia had come out talking about coal being part of their green taxonomy and still really developing coal power plants. So we were worried whether the bank was going to be part of that story. And we were also really worried about what we heard, that they were lending to the poorest of the poor in rural communities that found it difficult to access finance. That made us nervous because Indonesia, of course, has a big deforestation problem. And so to the extent that smallholder farmers are part of that problem, we really worried about the potential negative impacts that we weren't picking up there. What was really cool about this is once we started talking to the company, we found that they were the only bank anywhere in emerging markets that we've heard of that is actually putting such a strong policy on deforestation with on-the-ground monitoring to make sure that the deforestation policy is actually applied and implemented as expected. So that becomes really exciting because if we think about deforestation, one of the root causes of deforestation in emerging markets is indeed poverty and the lack of economic opportunities for these smallholder farmers. So the real solution here is indeed access to finance could be a really big part of that solution. Access to finance targeted at that particular population can be really powerful, much more powerful than just your standard microfinance approach. So that's why we like this story. Just by engaging with the company, we found far more out about their deforestation policy and were able to really tell a much broader story about the power of microfinance that they were offering and the potential biodiversity management and positive impact there as well. Okay, I'm almost out of time, so I'll leave you with this thought, which I always leave you with. Don't forget to engage the companies that you're investing in. And here, I just wanted to tell you a little bit about how we're doing this. So we're basically segmenting the world in 3 ways. If you look at the right-hand side of the chart, it really tells an interesting story too, right? So first, we're of course engaging with the companies without science-based targets. 57 million tons of CO2 Shell is putting into the atmosphere. That's GHG 1 and 2, scope 1 and 2 only, not even talking about their scope 3 emissions of their product diversification strategy, their investments in renewables, nothing like that, just scope 1 and 2 from their activities. 57 million tons, that's 0.1% of world GHG emissions. That is a huge proportion of world emissions, just in scope 1 and 2. Let's not even go there with scope 3, right? I wanted to give you a sense of the potential impact of the engagement activity that you can have here. I mean, we take the view of walking away from those companies is almost irresponsible if you think about it, because you're just handing that impact over to somebody else and hoping that they'll deal with the problem. It's actually our responsibility as investors to not ignore those impacts and try to do something about them. So that's why we continue engaging with Shell, BASF, with Engie, with their 30 million tons as well, even though they already have a 2-degree target, actually 1.5 target. And then, of course, the companies with the SBTi-approved targets, we're also trying to make sure that they're implementing. But as you can see, I wanted to give you an example. The companies that are implementing are the companies that are easiest, where it's easiest to do so. So only 0.6 million tons of CO2e out of Renault for scope 1 and 2. To be fair to Renault, they've got a really good scope 3 plan as well. So it's important to keep an eye on those companies and make sure that they're actually delivering on the promises that they make as well. So hopefully that gives you a bit of a flavor of different ways that you can impact the climate, not just through your classic investments in private equity or renewable energy projects in developed countries. There's quite a few avenues. Ask your fund manager to find those opportunities for you. There's plenty of them now. And don't forget to do the hard work to look at your overall traditional investment portfolio. Check how well those companies are prepared for the transition risk and engage with them to make sure that they are moving in the right direction. Thank you.